The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Well, good afternoon, everybody. It is Esther Gulius Tax Service here, EG Tax. Esther is off today. She is heading down to Florida for Easter.
Flip-flops.
Yeah, to wear flip-flops, sundra.
Trees.
Yes, just to get away from this.
What shade of gray is it?
Yes. At Buffalo, we can't decide what weather we want. We know what we want. We just can't decide if it wants to give it to us now or not.
Yeah, so I'm joined in studio with Chris Fabian, and I'm Tiffany Fabian, and aren't you relieved tax season 2018 is behind us?
Is it?
Yeah.
The hard part is.
Yeah, it is. It's a lot of work. I meet so many great people, get to talk to so many great people, and I'm blessed to be able to help them. And so we just want to say thank you for allowing us to serve you above all.
Right. Without you guys, we wouldn't be in business. We wouldn't be on air to help everybody.
Yep.
Without, you guys make us successful.
Yep.
So thank you.
Grateful, I think, is the word. And happy Easter to everybody. And I hope you enjoy your time with your family and your friends. And I hope you have a blessed holiday season.
Right. Yep. If you have questions for us today, 803-0930, 803-0930, star 930 on the cell phone. For those in Rochester or outside the regular listening area, 1-800-616-9236. And for those on their way to church, and we know there's an awful lot of them because people tell us all the time, I listen on the way to church. If you want to text in, 3930, and we'll take your questions that way too. Without you guys, we wouldn't be here. So
yeah, and I just want to let everybody know, if you're getting letters, if you're getting love letters, New York State is famous for, we need proof of your withholdings. And, get them over to our office, and at no charge we'll help you. If you have balance dues and you need to set up an installment agreement, or you need to set up a payment plan, or if you haven't gotten your refund, we'll help you at no charge. I mean, we're there Monday through Friday, 9 to 5, and I know my appointments are booked sporadically throughout the week, and tomorrow you have a whole book of
right. I think everybody across the board is pretty much booked.
Yeah, and Tuesday I'm going with somebody who's not our client on an audit. Don't go by yourself. Make sure you have somebody who's a professional go with you.
And I asked permission to say this to my client. If you're like Sarah R., who used TurboTax, and you haven't gotten your refund yet, double check with the IRS. TurboTax said her return was accepted, and she should have gotten her money. We called the IRS, and they said, "What return?" Yeah. So just double check your returns out there. If you're a do-it-yourselfer and you're not sure, we'll look over your return for free. That's what we do.
Absolutely.
Hopefully we don't find anything wrong with it, but if we do, we'll help you fix it. We'll fix it for you, for the good and bad. But,
right.
But there is both. So we got to say that. This summer we have our summer series again, our guests.
Yep, we're going to have Jeff Katz. We're going to Jeff Katz talk about estate planning. We're going to have Dennis Kitchen talk about bankruptcy and common basic law. We're going to have Judy on talking about real estate, Judy Jack Lewis. We're going to have maybe Kathy Anderson on. I know really popular was the property tax negotiator. He might be on Dave, I'm trying to think of his name. It'll come to me. So we're going to have lots of exciting people. Insurance, we're going to have Nationwide Insurance.
Ryan
Ferraro will be on talking about insurance and things that you
Dennis
should pay
Kitchen
attention.
talking about bankruptcy and other legal matters. But, we want to help you, our listeners.
We're going to have health insurance, Tim Eliason.
Tim Eliason talking about health insurance. And, boy, what a unbelievable thing, that roller coaster ride.
Yeah.
So all summer long, we are going to have special guests to help you, to help your pocketbook.
Right.
And today, we always talk about certain topics. It's, taxes just ended. And what do they always say that happens? What are the two certainties in life?
Death and taxes.
Death and taxes.
Right.
So we beat up taxes to death, over the last 12 weeks. So today we're gonna talk about your end of life. What to expect when you're passing.
Yep. But and pretty soon we're gonna go to our callers. We have Jerry, Elizabeth, and Debbie holding. But one thing tying into planning, I know Esther's really good about this, is that when you say you're going to do something, do it. And so, we see so many people who don't leave their affairs in order when they pass. And so we have on our website an organizer so that you can tell your heirs where everything is, how to access it, passcodes, identity codes, ways to unlock it, and where to find the details you need and some steps to follow.
Right. It's called a letter of instructions. So it's under our Road to Retirement section on our website. I can't talk today. Website. So if you go there, Tim is working on it now. It should probably be up tomorrow or Monday. But it's like Tiffany said, it's going to have everything you need to know, or not you, but your beneficiaries. Your surviving. Maybe it's your surviving spouse.
And your beneficiaries. Right. You want to go to Jerry before the break? Okay.
Sure. Hey, Jerry, how can we help you?
Hi, thanks for taking my call. I appreciate you two working on after a busy tech.
Thank you. I feel like I was telling my clients, I feel like I'm out in the world again because I was working from 8 in the morning till 1 in the morning. And so like I got to go to the store and to the bank. I felt like a real person. But thank you. It's my pleasure.
I know how much you work. My daughter is your client, and she told me you called her at midnight.
Yes, she does.
And,
yeah, I have this thing about making sure I return all my phone calls before I go home for the next day. Sometimes it's too late, but yeah, I probably did. I'm sorry.
No, it's fine. She was so happy that you got it done. The question I have is for a friend of mine because I don't know if he's listening or will call in. But he filed on TurboTax, and he got ready to transmit, and it wouldn't go because it said it has been filed already. So obviously, some scammer.
Yeah, and so what you have to do is you have to do an affidavit form.
Oh, maybe 3,000. But he said he went online elsewhere and looked over the form he had to submit.
An affidavit form.
And he did that, and then, of course, since he couldn't file federal on TurboTax, he couldn't file state.
Right.
So he had to get the form for that, too. But I'm just wondering if you have any, I was just checking for him to see if you have any idea of what the next step in the process will. They will contact him. And
well, what he's got to do is he's got to do a paper return.
Right, and do a form 14039.
14039, which is the affidavit form. And so he's got to do his return federal and state paper.
He did both ways. I'm wondering how long before he finds out.
It could take a long time. It could take 6 months. It could take 8 months. We had a client one time. It was like beginning of December, they finally got a letter saying, we're going to get you, your refund is coming, don't worry, we just finished processing it. And they filed the return in February. And when they got their check was for $140,000. So, yeah, the IRS processed the wrong return.
Oh, my God.
And if they would have cashed that check, they would have been found guilty of tax fraud and could have had jail time. So it could take a while, unfortunately, but hopefully he mailed in his copy of his driver's license and any other proof of identity that it is him.
And then always, it's a good idea to notify the credit reporting bureaus like Transamerica, Equifax, to notify them that this has been compromised. So you don't want to, some people even go as far as filing a police report, but he really should look at Equifax and Transamerica and make sure that nothing else was compromised, or to put a notification on Transamerica and Equifax that this has occurred.
Okay.
Yeah.
Doesn't the IRS, there's no flag. Obviously, somebody must have used a different address because he
Correct.
never got anything. The IRS doesn't flag. There's not a correlation when you submit your return with your address. You would think like simple things like that.
No, because people move all the time.
Oh.
So that's like we just moved our corporate office. So we are now getting mail at our office now at 1890 Colvin. So, I mean, it happened. People move, so they really can't use the address. It was good thinking. I like your thinking.
Yeah, but you're right. It's actually shameful that it doesn't. New York State sort of takes the approach where they make sure the ducks are in a row before they give you your refund. The IRS is a little bit more lenient in that matter, whereas they give you your refund and trust that everything is okay. But yeah, it's a growing problem.
Right. And if your friend needs help, Jerry, have him call us at the office at 632-7886. And, probably in a couple months we can call with him to see what's going on with his refund if he hasn't heard anything.
Or I could call with him on Monday or Tuesday or Wednesday and just make sure he's done everything he's supposed to do a conference call.
The thing is, when you file for your clients now, with TurboTax, he said, there is a PIN number that you've done the year before and everything, but doesn't help anymore?
No, because people can change their PIN year after year, and Chris is signaling.
We got to take a break, but hold on, Jerry. We'll be with you right after the break,
unless we answered all your questions.
And we'll be back right after this. Frank's making sure our bodies are moving after 12 long weeks of working hard. We're not falling asleep back here. EG Tax here to help you with whatever tax needs you have. 803-0930, 803-0930, star 930 on your cell phone. 3930 is the texting board. I know we have Elizabeth and Dan waiting, but going through tax season, people were amazed that their refunds dropped, that they owed balance, that they owed this year, that they didn't. What do they have to do to get this?
So you want to change your withholdings, or maybe for New York State, maybe you want to leave them where it is, because New York State is notorious for holding onto your refund. So maybe you might want to leave your New York State withholdings where they are, and you might want to fill out a new W-4 to change your withholdings, or put more money into your pensions or 401k or 403b, because it's not going to automatically go back to what it was for 2017. The roadmap has been set, and for 2019, you're going to have the same answer at the end unless you change something.
Right. And they are coming out with new W-4s this summer, so everybody's going to be onslaughted with them. Fill these out. And from what I've been reading online, it's worse than doing your tax return.
Well, before, whenever we were doing the W-4, we always discouraged you.
Don't do the worksheet.
Don't do the worksheet. Just call us, or the worksheet usually ends up giving you more withholdings than you should, is what I have found in my experience,
Yep.
True?
Yeah. You claim more than you should, and then you end up in trouble at the end of the tax season.
Yeah. And again, increasing your 401k or your 403b is always a good idea as well.
Right. And if you need help with that during the week, during the summer, we're at 1890 Colvin in Tonawanda. We're there 9 to 5, Monday through Friday, and we want to help you guys get it right so there's no surprises come next year. And going back to Jerry's with his friend's identity theft, Going forward, he will get a set PIN right from the IRS. Every year it will be different. So when he e-files his return going forward, he'll have a 6-digit PIN he'll have to put in on his tax
and that's
return.
different than the PIN that he talked about before. The PIN that he talked about was one that his friend made for himself. That was like signing electronically on the X. That was
It's like your debit card PIN.
Right, that's right.
Yep. So we'll go back to the phones. We'll go to Elizabeth from Lancaster. Hey, Elizabeth.
Oh, hello. I'm 70 years old, and I have several IRAs.
Okay.
But they haven't reached maturity date yet, so how can I get distribution?
Well, if they're in CDs, is that how they're invested? In their annuities? What are?
But I mean, I don't understand how I can get distribution.
Well, they're going to have to break them. If they're in CDs, it's just like when you have a CD at the bank yourself and you need the money, you got to cash it in early, and there's going to be a penalty. That's where your broker should have had this all planned out for you, how to handle it when you turn 70 and a half. You may have to wait.
Not CDs, they're IRAs.
Right, but are they invested in CDs inside the IRAs? It all depends how the investment is.
They're just bank IRAs.
Yeah, so the point is it doesn't matter if they're not reaching maturity. Once you reach your retirement, your RMD age, you have to take them, and so you'll have to be hit with a penalty. It doesn't matter. And so what Elizabeth is talking about, once you reach the age of 70 and a half, you have to take your required minimum distribution, and that's what she's looking at. And so regrettably, Elizabeth, you're going to have to take it even though it hasn't reached maturity age.
What are you at a bank with your IRAs? Are you at like Vanguard?
No, it's not Vanguard. It's none of that. It's just bank IRAs.
Okay, so if I were you, I would go to your bank where your IRAs are and sit down with their financial person and say, how are you going to handle this? And I bet you they have a game plan. Yep, put the ball in their court. I bet you they have a game plan, but they should tell you what their game plan is.
But the reason I got IRAs every year was to save on taxes.
Right. But unfortunately, the IRS says, well, now that you're 70 and a half, we want our share.
But I'm going to be penalized for it. I mean, why is the government making me a criminal?
They're not. They're not making you a criminal. They're making how your investments are being penalized. Like I said, your broker at the bank probably has this all figured out.
And then, Elizabeth, you don't have to take your RMD from each individual one. You can take the collective, and whatever that amount is collectively, you can take it out of just one of them. Are you aware of that?
Yeah, I am.
Okay. Yeah, a lot of people feel what you feel, and regrettably, they want you to pay tax on it. Esther has a solution that it's
yeah, but it's still gonna So Elizabeth, like if I were you, I would call your bank on Monday and meet with your financial person. See how if you don't like their answer, give us a call at the office, and we'll connect you with a couple other people, and you can ask them their opinion. But the whole thing is you have to know how your money is being invested inside that IRA, is because you can invest it in stocks, you can put it in an annuity, you can put it in CDs. So there's many different, you can just have a regular bank account inside of an IRA. So there's many different ways your IRA can be trying to make you money. You have to find out how and what their game plan is going forward now that you hit that magic age of 70 and a half to give you your money on a yearly basis.
I really thought this was the year that the government was going to help old people out and increase the age.
Yeah. I know that the tax reform was better for many of my senior clients, and so that was a positive. And you're right. They should be thinking of that demographic. I completely agree with you.
Okay. So if you need help, call us during the week.
Thank you so much.
Thank you. I understand her frustration.
It's very common.
It's very common. A lot of seniors think they're getting penalized because they're getting older. The IRS used IRAs as tools for you to delay to when you're making a lot of money, to not pay tax on that money till you're in a reduced tax bracket.
Yep, defer.
But how many people, seniors, do we see, Tiff, that don't have to file returns?
A lot.
That could take more money out of their IRAs and still pay no taxes.
Yep, and then make their RMD requirement less when they get to that point, that juncture.
Right.
Absolutely.
Right.
That's a really good point.
Or even do a qualified distribution to a charity.
Yes.
A QDC, where you can take your minimum distribution and have it go directly to a charity, and therefore it doesn't go on your tax return, so it doesn't impact your Social Security. You don't pay tax on that money, and especially with the higher standard deduction right now, it could be a great tool for a lot of seniors out there.
Definitely.
You know,
Definitely.
and
that's a really good point. And so a lot of my clients, they ask me how much, or people will call and say, how much room do I have before I have to pay tax on that? And that's a really good tool for tax planning.
Right, definitely. You know, and we'll go through the figures with Elizabeth to see what it will end up costing her. It may not cost her anything, but the big thing is, like we were saying in the beginning, in the show, because with that, know your investments. Let your beneficiaries know where your investments are. But the key thing is you should know your investments and how it's going to work when you reach 70 and a half.
Yeah.
Because it's right. If you have money invested in like a 3-year CD inside your IRA and it's only year one, then you yourself won't pay a penalty. Your IRA will pay the bank a penalty because you're cashing the
Now,
CD.
what if it was in a savings account like you had mentioned?
Right. Then they just make a distribution to you out of the savings account. I mean, so there could be plans that maybe this year you use the cash. Next year the CD comes due.
And when we get back, we're going to talk to Dan and Jacob on the other side.
Right. This is EG Tax. We'll see you soon. I don't know. This might be where Esther's going to be on a beach, relaxing, jamming to this music. I'm jealous. You know, but this is Chris Fabian in studio with my beautiful wife, Tiffany Fabian. We're from EG Tax. We're here to help you for the last 28 minutes, with whatever tax questions you may have. 803-0930, star 930 on your cell phone. Texting is 3930, and they've been really quiet today on the text board.
Yeah, and Esther just texted me, and she says that if you have an IRA and the bank can distribute it without breaking the CD, she thinks, the RMD. So
okay.
We'll look into that further.
Right. So even though she's off on her way, she's listening to the show. So, and another tool that we discovered this week for people approaching the minimum distribution age to help them reduce their minimum distribution is a QLAC.
Right, that's what I was alluding to with that
before,
lady.
Yep. But it's before she can't, because she's worried about breaking all her investments.
Right.
But a QLAC is a qualified longevity annuity contract. So it's you can take up to $125,000 of your IRA and move it into an annuity through an IRA, but you don't have to take minimum distributions out until you're 85.
Is this brand new?
I believe so.
No, I don't think so. I don't know. Maybe it is. But anyways, that's pretty cool.
So it's a great way to help reduce your minimum distribution. So, it's I know I've talked to an elder care lawyer who had no idea about this. So I have a feeling it's like probably within a couple years of being new. So we have information. What a great tool, especially if you're married. It's $125,000 for him, $125,000 for her. So, I mean, $125,000. I'm trying to pull out my calculator.
While you're pulling out your calculator, you want to go to
divided by 27.4. That saves you $4,500 just in the first year.
That's not bad.
So that's pretty good. So we're going to go to the phones and talk to Dan, who's been patiently waiting. Hey, Dan, how can we help you?
Hey there. I'm a tax preparer. I a client. I'm 95% sure of this answer.
Well, this is fun. We do this sometimes. We'll call others, you know what I mean? So what is the question?
Okay, I have a client who owed from 2013. That was the last time she filed, and she owed money. Since then, she had nothing taken out of her withholding for her paychecks until recently. Now, I can't file 14, and she gave me W-2s and also like transcripts from the IRS for her previous year's W-2s. Now, I can't file 14 and 15, right? It's way too late.
If there was refunds coming, yep, it's way too late. They're gone. They won't even apply it to her debt.
15 was the last year, and that just closed. 15, but if she owes, you have to file those prior years. But you're right, 14 is a dead year, and she can't get the refund. And even as Chris said,
no, I'm sorry. She's not going to do a refund because she didn't have
withholdings.
She's going to owe. So I can go back to.
Yeah, you have to. If she owes them money, you're going to have to file a 14 and a 15 return.
Oh, okay. And obviously, I'm going to have to mail those because e-filing for those years will be closed.
Yeah, they have been closed for a long time. Yep, since last year.
Okay, wow, I didn't know. Okay, since she owed because she didn't have anything taken out, I can do 14, 15, and of course 16, 17, and 18.
Yes, definitely.
Yeah.
Well,
and then don't forget you got to do New York State. And so she gave you the transcripts for the federal. You're going to have to call New York State to get the withholdings for the state.
If she had any.
If she had any. But usually I've noticed a lot of people, if they do exempt on the federal, they still have New York State withholdings.
Okay, yeah, I'll double check on the New York State one.
Yeah.
I do like your show. It's educational for me too.
Good.
Well, it's a good show.
Yeah,
Thank you.
We learn from each other. I know that there's a Canadian accountant that calls us all the time with tax questions. I mean, we help each other, you know?
Yeah.
Yep.
I appreciate it. Well, if I can ever help you, give me a call.
Okay.
Thanks, Dan.
From Cheektowaga.
You know, I mean, that's one of the sad things about taxes. You have a refund coming, they keep it. You owe, you still have to file. You know, and one thing Dan might want to look into, if it was the friendlier version of the IRS, would possibly be an offer for her. But we know they've been, Tiff's in here rolling her eyes right now. They've been a little bit stingy on the offers. But it could be a possibility for her depending on her financial situation. So there's that also, Dan.
Correct.
And we're going to now go to Jacob. Hey, Jacob.
Hey, thanks for taking my call, guys. So a quick question on an inherited 401k. So I had an aunt who passed. She was not 70 yet. She left all the nieces and nephews a pretty considerable chunk of change, and it's now sitting in an inherited 401k, and it's not transferable to my workplace 401k. I've already checked on that.
Right. Chris is shaking his head. He's saying that's correct.
Okay.
But and now when somebody passes away, you have three options. You can take all the money that you inherited right up front into a lump sum. You can roll it over into a 5-year equal payment, or you can annuitize it over your lifetime. So those were the three options that you had. Do you know which option you took?
So it's I believe the 5-year one. So it's basically sitting in a 401k invested through her employer as it would be as if she were still alive, is my understanding.
Yep. It's either your two options for that is either leave it there in the beneficial 401k, or you could move it into a beneficial IRA.
And then don't forget, if she was over the age of 59 and a half, based on the amount of recipients that received the money, you can exclude up to $20,000 a year off of New York. I know you said they weren't 70, but was she over the age of 59 and a half, Jacob?
She was.
Yeah, so you would take the $20,000 exclusion, divide it by how many beneficiaries. So we'll say there was 4 to keep it simple. So that would mean everybody involved would get a $5,000 subtraction from New York State.
If there were 4.
Okay.
Did we answer your question? I don't know if we answered your question.
Well, and I guess the biggest question is, let's say I wanted to take let's call it 50 grand just for argument's sake. If I wanted to take 10 grand out right now, I have conflicting information whether I would pay an additional penalty outside of the income tax.
No, you have to take it out over 5 years. So you can take a big chunk in 1 year if you wanted to, as long as it's gone in 5 years.
Yeah, but what you're referring to is the 10% penalty for early withdrawal, and that you will not be experience, because in box 7 it's going to have a code 4 for a recipient of a death payout, and so that's not going to be privy to the 10% penalty, which is a good thing for you.
So what would be the circumstance where someone would have to pay the 10%?
If it was your pension.
Okay.
So if you went into your own 401k to take money out and you're under 59 and a half, then you would get hit with the 10% penalty. But since this is the inherited 401k, there is no penalty. So if you need money, take it out of there instead of your own.
Yeah, but don't forget, you're still going to pay tax on it on the federal, and maybe you get some exclusion on New York State. So I like your rationale about not taking, if you need 50, all of it, spreading it out over a few years.
Right, and this is all regardless of my age, correct?
Correct.
Okay.
Yeah.
All right, guys.
Okay.
Thank you. Sorry
Thank
about
you.
If you have other questions, give us a call. Sorry about the person who passed away.
Oh.
Yeah. And that's part of planning. You know, we talked about the show about having plans. And so what if, Chris, for instance, what if somebody had money when they passed away and they left it in an estate or in a fiduciary?
If they had no beneficiaries.
And why would that be bad?
Right. So here, his aunt was very smart, listed the beneficiaries. So they got the money. They control when it's being taken out, because if it went right to her estate, if she had no beneficiaries listed, the estate would pay 37%.
Gulp.
Just to the federal.
Wow.
Not to mention New York State at their 8%. So you're looking 45% of the money. So if there was $100,000, they're only left with $55,000 to give to the beneficiaries.
And that's why you should make sure that you have beneficiaries and you plan, or if you put it in an estate or a trust, that you take the money out and you don't leave it sitting in there.
If you're the executor of an estate, when they say, hey, guess what? Your Aunt Susie passed away and you're the executor, you got to make sure everything's done right. Give us a call so we can help you so you don't get killed in taxes.
That's right.
I
did so many didn't mean to step on you. I did so many tax returns this year where people had estates and trusts, and the amount of taxes that they paid was just astonishing.
Right. Trusts are a little bit different because it's how it's set up because the person's still alive. So, but you got to look at the whole picture. We do have a text to...
Oh, yeah. It says, before we get to Mike, it says, how can someone get an HSA?
First of all, HSA is a health savings account for those who don't know. Step 1, you have to have a high deductible insurance plan. Mm-hmm. So if
there's a lot of those out there now.
There definitely are a lot out there, but they do have to qualify. I believe it's $2,000 now for a single person in order to get the HSA. You can go to a bank to create the HSA. I know KeyBank and almost said First Niagara. M&T, Northwest has HSAs. You can ask your employer who they use, because you can contribute through your paycheck to the HSA, and then you could even contribute with after-tax dollars to that HSA too if you wanted to.
And if you contribute with after-tax dollars, there's an adjustment to income that you can take on your tax return. And so it's really important that you track if you use it within your employer, where you'll use pre-tax dollars, or if you open up your checkbook and you write a check to put money into your HSA.
Right. And the nice thing about an HSA, unlike an FSA, which is a flexible spending account, an HSA, you get to carry that money over year after year after year, where a flexible spending account, you lose it come December 31st, whatever you don't use. So it's a nice savings plan for you. There was something else I was going to say about HSAs. Sorry, Tiff.
No.
If you take money out for the do-it-yourselfers, if you take money out of your HSA, you have to record it on your tax return. If you don't record it, you're going to get a bill in about a year and a half because it's a penalty. Yep. And it counts as income on your tax return.
It goes on a Form 8889, and if you use it for medical, there's no cost to you, which majority of people do. But like Chris said, it has to be recorded on an 8889, or else the IRS assumes that you didn't use it for medical purposes.
Correct. And Chris Fabian, Tiffany Fabian here from EG Tax. We're going to take a fast break, and we'll get to Mike after the break.
Yeah.
Stick to That's for the person who texted in that they didn't like the word. Yep. This is Chris Fabian and Tiffany Fabian from EG Tax. We're here to help you this Saturday. I would love to say lovely Saturday, but it is a blessed Saturday. Easter's tomorrow. Wishing you and yours a very happy and blessed Easter. You know, hopefully the Easter Bunny gives you Easter eggs and not the other end. So good treats, not bad treats.
Yep.
We do have a texter.
Oh, we do? Well, okay, before we get to Mike, okay. Hello, you two. I didn't owe, nor was I due a refund, so I was told not to file. New info has surfaced which would qualify me for a refund from the IRS in New York. So should I just file both 18 and 19 together next year? I think that she should come in and file 18 right away, you know, not for any other reason except for the fact that eventually, you know, she should get her 18 going right away.
If you have money coming, if you have money coming back, get it in now. Yeah. Get your money. Don't let them hold on to it any longer. Because heaven forbid something happens to you, you forget, and then they're just going to keep the money.
Yeah, I would do it right away and not wait. And anyways, it'll help you plan for 19. I would come in and get it filed right away.
Okay. And let's go to Mike from Lackawanna. Hey, Mike.
How you doing? Thanks for taking my call.
Not a problem.
I ended up on a disability pension because of an injury at work and fell behind in my paperwork, everything.
That happens.
Doing my past taxes, I've been advised by everybody, you know, people from the IRS and everything, to push it to the next year because even late filing fees go on what you owe, and if you don't owe anything, there's no fee. But they constantly send me checks, especially the state, too, when they used to push it to the next year. I don't know what to do.
You mean
checks?
You mean you file a return and you just keep applying your refund to next year?
To the following year, but these are, you know, not filed on time, but within the 3-year period. And they've all said push it to the next year because you don't want to owe anything, otherwise they'll kill me with penalties and taxes.
Oh, I would take your money every year and run. And if you think you're going to owe, you put money. But you should see a pattern because your income is pretty constant now, right, Mike?
Right now, the pattern is let's grab everything because I'm not going to have any problem going forward. Last year that was filed was 2015. And but like I say, I got a lot of checks here, and I've never cashed them. I pushed them forward, and they never apply them.
Yeah, you should cash them. And what Mike is referring to, so anybody who's listening, is when he gets a refund, he's not taking the refund, he's applying it to the future years. And what Chris was alluding to is the fact that now that you're disabled, your income should be pretty consistent and constant. And so planning should be very easy. And so I would think that you should take those refunds, and so does Chris. And if you have questions, you can give us a call. But I really think that you're missing the money, you know.
Yeah, because say if you have a $2,000 refund there, Mike, and you give it to the IRS, and then the next year you have that same $2,000, you now have a $2,500 refund, and you give it to the IRS. All you're doing is letting them use that $2,000 year after year after year. And
I understand. But what if I'm short?
But if it's the same income every year, Mike, you're not going to be short.
Just recently we got to that point, and I was itemizing. Of course, when I hit 2018, I won't itemize anymore.
Possibly.
But finding the paperwork, if you become disabled, a lot of times that's the worst thing in the world.
Yeah, well, one of my clients, he's disabled, and we always fill out a form 4506T, and we get all of the tax documents from the IRS, and they're really good because I know what you mean. When you're disabled, your physicality, your mentation suffers, but you fill out a form 4506T, and within 10 days, the IRS gets you all the information that you need with no charge to fill your return out. So
I beg to differ with you. They're not going to tell me what I spent medically.
This is true.
A lot of money. I mean, I had some implants put in, and they're expensive.
Right. Are you married or single, Mike? May I ask?
I don't know. It's like if you don't have sex for 20 years, are you still a virgin? I hate to be
So the truth is, like you said, it's gonna, since it sounds like possibly you're married, it's going to be harder for you to itemize. But maybe
with the dental implants and all that, you still might be able to.
But you do have a point. That itemized deductions is harder to get together.
I mean, if I were you, Tiffany is a great person to help with stuff like this. She's going to kill me after the show. Call her on Monday, Mike. I would set an appointment with her. She will get you by probably within 2 months all up to date with your taxes. So going forward, you will know what to do, whether you need that money withheld, need to pay estimates, just take that money and run,
Somebody wanted me to add, Chris was wondering, are you cashing the refund checks, Mike, or are you holding on to the refund checks?
Because I was advised a long time ago. I used to get letters, and I did stop down and talk to Esther. Letters that said I owe $500,000 plus, and they're still doing taxes, and there was stock sales on there. And I haven't sold or bought a stock in years. But he said, you know what, assuming that you made that money, they never used to report what you paid for it. So it was always assumed a gain.
Could you mail me the letters, or if you're in such bad, or if you're in good enough shape, can you come in and sit with me or mail me a copy of these letters? Because something just isn't adding up.
And your refund checks you're just holding on to them. You never cash them?
I never cash them in because they're supposed to go to the next year. And now I'm at the point where everything is be like...
Wait, Mike.
There's so many days.
If you got the checks, they're not going to next year. You got the money. You got to make sure those checks are still good. Otherwise, you're going to have to call New York State or the IRS and say, hey, I need those checks reissued.
I understand, but why did they stop all of a sudden applying them to the following year when they were carrying them through at the beginning?
I don't know. I think you should call us on Monday and we'll figure it out.
We'll do a conference call with New York State or the IRS.
You don't even have to leave your house if you're not able to, because it sounds like a very peculiar situation.
Oh, it is.
Okay, so give us a call on Monday at 632-7886.
And super to me, everybody. Very great.
Thank you. And you're right. Esther gives great advice, and so thank you very much.
Okay, you have a good one.
You too, Mike.
How many people out there are holding on to checks that just...
Yeah, he's absolutely...
You got it. If you get a check from the government, if you see that's your refund and you know that's yours, cash that check.
When people come into my office and they're in front of me, a lot of times invariably they'll still have checks, and I'm like, go to the bank after you leave here and cash the checks.
Yep. How about dividend checks?
Yes.
They come in, these aren't opened. And I always say when I open envelopes, I keep all checks. I don't keep all checks. I give them to them. But it's a way, because there are people out there who just holding on to their money or don't even realize because the modern age with direct deposit. But EG Tax, we're here to help you. Couple minutes left. If you got
I just want to read the text. It says, great show. Love listening to you guys as a team, and thank you for understanding the listeners' situations.
So thank you for that. If you need us during the week, 632-7886, 632-7886. Our website is egtax.com. Right on that website is Ask the Tax Lady.
And then, Tim texted in, and Tim wanted me to say that the form is now live, what to plan when you need to plan to get your affairs in order. And it's on egtax.com. It's under the pension and planning and retirement.
Road to retirement. So there's, that's a great tool, another tool for you guys to have. So our website has everything, including the tab that says Ask the Tax Lady. That goes right to Esther herself. She will be eating dinner, and her phone will go bling, and she'll take out her phone and she'll answer your tax question right then and there. So, I mean, if you don't see an answer within a couple hours, if it's 3 a.m, sometimes she does do that then, but usually within 5 hours, she answers your question. But we are there all year for you guys.
And then make sure if you get letters, give us a call. I'm planning, I'm believing with New York State that you were able to itemize many things that you couldn't on the federal, that there'll be more letters from New York State. And more than anything, don't let it go. Make sure you answer the letter and address it, because I think that's part of the game plan, is that they're hoping that you just let it go. And don't do that. Let us be your advocate, and we certainly will be.
And we didn't really get to the meat and potatoes of the show. But again, go through your IRAs, your pensions. Make sure you have the right person listed as your beneficiaries. Update your wills. Talk to your children. Children, talk to your parents. Even if it's Mom, Dad, I downloaded this form from EG Tax's website. Please fill it out. Here's the folder. Put this folder right in your dresser drawer, so heaven forbid when that day comes, we'll know where everything is, and it will make life easier. Because trust me, I can't tell you how many people come in with their hair all pulled, and
then also your houses, if you're going to have somebody's going to inherit your house, make sure they know all the improvements that you did to the house, because that's all part of your basis.
Right. Is it a life estate? Are you gifting the house? There's a lot of planning going in when you're up there in age. If you need help, EG Tax is there for you, 632-7886, Monday through Friday. Yes, Monday through Friday now. But if you don't ask, we can't help you. And as I tell my girls every day, be good and be safe. This is EG Tax. Until next weekend, happy Easter, and we'll see you next Saturday.